In Kenya, 50 million hearts beat with 50 million different dreams. Some are written in boardrooms, some on truck, others in our busy marketplaces, and many more in the quiet moments of a family home. Here at Absa, we've built our brand on this premise, on the foundational understanding that progress doesn't begin with products and transactions. It begins with people, their ambitions, their resilience, and the stories that span beyond what we see on their faces. Here, we don't just see customers, we see stories, and we believe your story matters. Over the past few years, we've transformed these words from a tagline to a lived reality. In moments of excellence, in arenas of discipline and determination, in spaces that reflect the country's ambition, we have shown up where our customers' passions live, proving that we aren't just a bank, we're a partner in the Kenyan dream. And that conviction is strongest on the inside. Through I Am Absa, our colleagues have moved from alignment to ownership. We show up with pride, with creativity, with belief. Because when our people own the brand leads with confidence, carrying our customers' dreams as our own. We're building a culture that our people can be proud of.
I am Absa.
We believe that a brand is only as successful as the communities where it operates. Through the Absa Kenya Foundation, we've focused on building impact that lasts, advancing sustainability, inclusion, and opportunity. From restoring biodiversity ecosystems to equipping learners with the skills of tomorrow to expanding access to finance for women, youth, and MSMEs. We are investing in the stories that haven't been heard yet, ensuring that our growth leaves a footprint of hope and opportunity across Kenya. We're building a brand Kenyans love. Ultimately, our journey is not defined by our milestones, but by our customers' growth. We exist because of the dreamer, the doer, and the builder, and that's our customer. With deep-seated conviction and commitment to serve, not just with efficiency, but with empathy. Absa, your story matters.
Running a marathon needs a lot of patience, and that's what we take into the business. We started with selling racket items. That's the genesis of the name, Badek. That's how we scaled up and started selling outdoor items, which have now been a blessing to us. We feel honored that Absa has taken us up as the main suppliers. If Absa is able to trust us as a small shop, then it means that in whatever you do, in whatever effort that you are putting, someone else is watching. We have been able to keep our Olympic team that went to the Paris 2024. You need three values to excel. You need to be disciplined, you need to be consistent, and you need to be able to manage your time well.
As women entrepreneurs, there is a gender discrimination. It is rife, and I keep telling people, if you are a woman business person, you have to be above average to be able to compete with the average men. They wanted us to show that we had the financial muscle to do the distribution, and that is where Absa came in for me. The outlets we serve are the ones that are 700. Absa came in handy. They provided loans, asset financing loans, and I got to choose vehicles, according to their performance. They have shared my dreams and taken risks with me, and that is why I am where I am today.
My name is Samuel Mukilia, the founder Greenland Group of Schools. These are schools whereby girls, they are allowed to study alongside their babies. The community, they should have a system whereby we support the teen moms. If you help a teen mom, you help two generations. One, the baby and the mother. By that time, Absa came, they donated two essential things. One was the computer lab, food, and the diapers. Absa, they did not only donate, but they opened a door. More partners, they have come into Greenland. Absa has increased our population from 160 to 330. Right now, Greenland has showed the world the girls can make it again. Motherhood is not the end of education.
I'd like to extend a very warm welcome on behalf of the entire bank that is called Absa to our guests joining us in this room today. Karibuni sana. We are serving breakfast hope you can grab a coffee to warm you up. For our Muslim brothers and sisters, Ramadan Karim. For very many of our customers and stakeholders that are following us on our online platforms, Karibuni sana. This session is broadcasted across different social media platforms, YouTube, Facebook, LinkedIn. And we do really welcome you to engage with us throughout the session. You can drop us comments, questions, in any of those platforms. And for those that are still swimming through Nairobi since the rains have come down this morning, we hope that you can follow this and you make it into the room in good time for us to progress together. I think just in terms of how the morning will run, it's the usual. We'll have presentations from the members of our management committee, and then we will have a session where you can engage us in a question and answer engagement. And as always, we are happy to take any questions, to engage with you, not just in the forms of questions, but also in comments and any feedback that you have for our business. I think before we get into the presentations, allow me to just make quick introductions of our members of the Country Management Committee that are in the room, so that in case you need to know anything about Absa and you can't find Abdi or you can't find our chairman and you can't find me, you have other very senior leaders represented in this room that take care of the different departments that we have as a bank. So may I please kindly ask our CMC members to rise up so that I may introduce you, or it's better I introduce you and you stand up so that people can see you. And I'll start with Elizabeth Wasuna, who is, thank you very much, who is not a stranger in this room. A lot of you know her for many years. Elizabeth is now serving as the Director of Strategic Partnerships at Absa Bank Kenya PLC. Elizabeth, thanks very much. And then we have Julius, the man who keeps the engine running. Julius is our Chief Operating and Digital Officer. And then we have Sharon, who ensures that we are doing the right things at all times. Sharon is our Chief Internal Auditor. We have Sophia, our Treasurer. Thank you, Sophia. Then we have Albert, who is the Chief of Staff in the Office of the Managing Director. And then we have our elder, Mr. Shera Waithaka is our Chief Risk Officer. Thank you, Shera. You may sit down. I'll come to Moses, who runs our consumer bank. Thank you, Moses. Yusuf will come on stage. Chairman, thank you very much. Will come on stage, and so will Abdi. Then we'll come to the man who understands the law and ensures that we are coloring between the lines. That's Ken Kanyarati, is our Legal and Compliance Director. Then we have a new kid on the block, so to speak. Name is Renato D'Souza. Renato has joined us just this year, running our business banking division. Karibu sana, Renato, to our first engagement with you in such a forum. And then we have got Elizabeth Monga, who is our head of strategy for the bank. And then finally, hoping that I haven't left anybody else, finally we have Mombi Kahindo. She's our employer. She's our Chief People Officer. Put your hands together for these members of our leadership who ensure that we are running the bank in the right way. Chairman, karibu sana for joining us, and thank you for joining us for this session. I will now hand over to Abdi, who will take us through the next sessions and get a chance to introduce our chairman to this room for the first time. Pigieni makofi tafadhali.
Our chairman, Mr. Mohamed Nyaoga, our shareholders, members of the media, colleagues from Absa, good morning. I'm Jambo. You know, this is the second time that Charles has had a good breakfast and told me Ramadan Kareem. Yeah? We had the same last year as well. And today, as I was walking in, the breakfast was looking so good that I almost joined in solidarity with our breakfast team. But thank you very much once again. It's that time of the year, and we will soon go into the actual financial presentations. But as mentioned, it's the first session for our chairman and our new chairman. I don't know, Mohammed, whether we can still use the term new, to join us for the results announcement. Mohammed joined us last year, and you will recall in the last results announcement, our former chair, Mr. Charles Mushene, announced that was going to be his final one, and we thank him in absentia for 9 years of wonderful leadership. And Mohammed has been with us now for a few months, bringing with him, as many of you know, a lot of experience from the private as well as the public sector, most notably as the chairman of the Central Bank of Kenya, previously chair of EcoBank, and has held a number of board positions in different organizations over the years. And in addition to that, busy day job, is also a partner in Mohammed Mwigai and Company, and you know, that is what he does on a full-time basis, and many, many other things, including training and development on corporate governance, and a lot of work he has done in the past on behalf of the IMF, training central bankers across the world. And so as Absa, we are very, very glad and very pleased to have Mohammed on board. And given that it is his first one, we always say, in Kenya we say salimia, isn't it? To say hello to the people. So karibu sana, Mr. Chairman, and I welcome you to say a few words.
Good morning. Good morning. In fact, this is my very first such session. And Abdi, thank you very much for your very generous introduction. I'm actually glad this morning to join you, and of course management, in looking back at 2025. When I took over as chair, I took over a very robust, vibrant institution that has a very elaborate governance framework. And as a board, we are actually committed to ensure that we drive this very big engine and strong engine to efficiency and enhanced performance. As a board, of course, we have in place in the organization a strategy, and we are very much committed to strategic execution and governance performance of this institution. Of course, we looked at the results of 2025. We are very pleased at the performance, and we assure you that as we move forward, we shall have even better performance, brighter, bigger, stronger, because we want to drive the institution to competitive excellence, not just excellence, competitive excellence. We have a very strong team in place that has been introduced this morning, led by Abdi. We have a very strong board composed of people with diverse skills that are ready to drive this institution to the next level. So we assure you that as our stakeholders, other stakeholders out there, you are in very good, strong hands. Please welcome.
Thank you, Chairman. A big round of applause for Chairman. And it's now our pleasure to kick off the formal session. And as we always do, I will cover a bit of the context in which we operated last year, 2025. I'll cover a strategic update in terms of how well we are executing the strategy and what we have done to that extent. Thereafter, I will call in my friend Yusuf Omari to give us the numbers, and I'll come back to conclude. So it's a fairly straightforward structure that we have followed over the past few years. On the macros and just the operating context, if I can start with that slide, I think the overarching message and the key words there is resilience in the growth of Kenya's GDP. We've seen over the last 3 or 4 years. I think we are showing up to 2024 there. But even if you extended that to 2023, 2022, the growth has generally been in that ballpark of about 5%, which continues to remain higher than the Pan-African average and also higher than the global growth average. And it's been a consistent story. It's a multi-sector growth story, and it's a very well-diversified growth. And we believe that it is sustainable, of course, subject to everything else that is happening. And we look forward to that stability. So resilience is a word. Stable is another word. We've had stability in some of the key metrics around inflation, the FX markets, and a number of other areas that have shown really resilience and stability over that period of time. You will see extreme right there what's happened to the CBR, which is the benchmark rate that drives the cost of credit in the industry. Again, a consistent drop quarter on quarter from around 13 all the way down to 8.75, which is the first time in a few years that we've gone below the 9% mark. And this is quite important for the market. It's important because that figure drives the private sector lending total volume. As the prices come down, we expect, and we are already seeing, the increase in private sector credit. It's also important because we have, as an industry, including Absa, improved the level of transmission of that benchmark rate to the market. And so you will see as we go into our numbers that the certain revenue lines show that impact, and the benefit, the contra benefit goes to the customers, almost to the same number. If you look at that CBR drop and you look at the average rates that we are charging our own customers, the drop is quite similar. I think we've talked about the private sector credit number. It's going up. It's a good sign. The whole idea of bringing CBR down is to improve credit performance across the entire market. And we see the PMI index also looking generally stable around the 50% mark. And as I said, the FX markets have been stable, I think about 8 quarters in a row. And that has created good stability for the market, good predictability for both importers and exporters, and a good supply as well and liquidity in the market, with the reserve at an all-time high, somewhere between 5 and 6 months worth of cover. So overall, stability. On the reverse side of that is always the headwinds and those areas that we need to watch out for. And of course, the biggest one in the current weeks is what is happening in the geopolitical environment, the war that is going on, and potentially the impact it could have on global macros, the impact it could have on supply chains, commodity prices, etc. And that's something, as a group, we continue to monitor, and we will adjust our strategy accordingly, and we'll work with our customers through the cycle as it comes. So that's the macro story. Let me then come into our world of Absa. I think this slide you are familiar with pretty much shows us the footprint that we have, both at an Africa level as well as within our country, Kenya. At a group level, strong Pan-African organization, one of the strongest banking balance sheets in the continent, well represented in those shaded areas that you see there, quite a number of countries of presence, and in East Africa, a very good coverage of the entire region that allows us to support our customers across borders in the region as well. And in Kenya, the branch network continues to grow. 89, now almost 90 branches. My friend Moses Mudhui is taking me out to Wajir after the fasting, and we are doing the formal opening there of our newest branch of the organization. We see a continuous increase in the points of sale presence. Few years ago, that number was just 5,000, and these are outlets and places where our clients can use their cards for transactions, now at 20,000 number. The agency network, when I last spoke to you, was in the 4,000 kind of range, and since our last report, it has doubled into the 8,000 number, and we continue to work and look at, how this supports our distribution strategy and ensuring that we are present where our customers are and we provide the services at that point. I think the last thing I would like to say on this slide is really the international presence, which is also continues to grow with 3 international offices, another one coming up very shortly to be announced, and therefore providing us as the Absa Group with a global footprint that is a key requirement for a bank of our size. Let me then switch to the strategy and the strategic direction. Again, for those of you analysts, media people who have been attending our results, this would not be new. I'll give a brief update on each of these in the following slides, but we continue to drive our strategy along 3 key pillars: running a competitive and digitally enabled consumer bank, competing in the business banking environment, and welcome Renato, welcome on board. Renato taking over the leadership of that team as we move into the next phase of the strategic plan. And of course, continuing to play a very strong role in corporate banking, which has traditionally been a stronghold for Absa. And to support those 3 strong agendas is really looking at what we do around our people and our talent within the organization, the work that we continue to do around developing and building the Absa brand, and lastly, creating a digitally enabled bank and investing extensively in driving our digital agenda. So that is what keeps us awake. That is what we work on every single day with my team. And at the center of that circle, as you see, is really how our strategy is anchored on driving client experience and ensuring that our growth and our transformation is at the service of one thing and one thing only, which is our customers. What are their needs? What are the solutions that they require? And how do we continue to innovate and drive those solutions? Let me then go into a few very quick updates on the different aspects of that strategic plan. At the top there is the work we are doing on consumer banking. A lot of work to drive premier and prestige, which are key segments that the bank has been engaged in over the years, and really investing in people, the relationship capability, products and propositions, and the digital solutions that drive that space. I spoke about distribution earlier, agency, branch, and all the other network approaches that we have in place. Driving the digital lending proposition, which is a key, as you will see in the numbers later, a key growth engine for the organization. A lot of work on the credit card and debit card propositions. Again, we continue to be the number one in the market in our credit card offering with a significant market share, and that's an area where we continue to innovate and support, the market. On bank assurance and some of the new propositions in consumer banking, we see double-digit growth that is taking us into market leadership, and I think we've given the example there of the bank assurance piece as well. Moving on to the business banking segment, a lot of work on ecosystems, and again, this is a very important part of the strategy where we are identifying key growth ecosystems in the market, whether it's education, health, and ensuring that we are providing end-to-end service into that ecosystem, mostly digitally enabled. And again, you will see a lot of the investments that we are doing are in that space. On the Islamic banking side, we are currently the biggest in the market. We were market leaders on this. We were the first bank to start an Islamic banking proposition. And just yesterday evening, actually, in the very next room, we had an iftar event with our clients, and chairman and I were present, but we were dressed very, very differently from the way we are dressed this morning. And really, it's a big area of opportunity, a big area of growth. There is a lot of work being done around capacity building and supporting SMEs, and we've given some of the numbers there on what we do there, and a lot of digitization as well into that space. Lastly, on the business pillars, is really to go into corporate banking and some of the work we've done there. I think it's fair to say in the CIB strategy that if it's big and it's a transaction happening in Kenya, Absa would most likely have done it or be involved in it in some form or shape. And we've given some indications there of some of the big transactions we've done. Diageo EABL, 16 billion medium-term note. The Sanking deal, which was a solar transaction, 20 billion. Bamburi and the entire transaction there around the acquisition. The transaction around EABL, Diageo, and the new partners that have come in there, which is one of the biggest single transactions in the entire continent, and we were very pleased to have been the advisors on both sides of that transaction as a group, and quite a number of other key anchor transactions that have happened in the economy that we've played a very big role in. We've started expanding into the public sector, and we've done a number of key deals in the public sector as well. But underneath all of that, there is a core corporate bank that is transacting, that is growing, and we've just picked one example there on the FX market share and how that has moved in the course of the year 2024-2025. And you will see that our market share in the FX market grew in the course of that 1 year from 9% to 15% market share. Our ranking has gone from number 6 in the market to 2nd. And of course, as people publish, we'll update this for the full year and we'll see how that looks like. But it's an excellent trajectory that we see in that as well. Now, one of the pillars that we track very aggressively within Absa is to look at how well we are innovating, how well our new business functions are performing, and we track those new businesses, bank assurance, asset management, custody, and quite a number of other new streams as a share of the total bank. And you can see over the years from a low of about 3%, we are now getting to 7% of the total bank coming from these new revenue streams. And the expectation is to grow this to about 10% and beyond in the coming years. And to do that, we have to grow it faster than the bank itself. You will see in the year 2025, we grew that new businesses segment by about 17%. And some of the key areas are shown down there. Asset management up 97%, now getting to number 3 in the market. Bank assurance, we are the most profitable in the Kenya market, up 37%, and so on and so forth. There's quite a number of other examples there. In the custody business, just on the right there, up from 17 billion 2023 to 46 billion under management in the year 2025. Custody in the corporate banking side, 2024 was our year 1, and it was a very small number there of 4 billion. 2025 closed at 70 billion plus, and it's an area that will continue driving as well. So a lot of growth in those new sectors and new businesses, and this is quite an important message for the sustainability of the bank's revenues, because as products mature, as revenues flatten in certain areas, we want to make sure that new streams are coming through as we move along. We've shared in the next slide some statistics around digital and how we are digitizing the organization and investing in that digital capability. Typically, we do 2 to 3 billion of investment per year, and 2025 was no different in ensuring that we are migrating transactions to our digital platforms. We are making it easier for our customers to transact with us, and we are migrating as much as we can. You will see that number of 94%. That is the number of transactions, the percentage of our transactions happening away from the traditional channel of the branch. And that number a few years ago was 40%. And so you see a significant migration of customers, both in retail as well as corporate, to self-service channels. The 71% at the bottom there is the work that Julius Kamau and his team spend their life on, which is straight-through processing, creating back-office efficiency. And today we do about 71% of our total transactions through straight-through processing. The next slide covers the brand and sustainability agenda. And really, the Absa brand, as you know, has great awareness, great affinity within the market. But every year, we spend a lot of time and a lot of investment driving that brand and ensuring that it is an asset that supports our business growth. And, there's a lot happening in this space, but we've picked 1 or 2 key examples of properties and investments that help us drive that brand story. Magical Kenya Open, it was just a week or so back. Great international platform to market not just Absa, but to market our country with players and participants coming from all over the world. And this year we were honored to host His Excellency the President, as well as the Prime Cabinet Secretary, 3 cabinet ministers, including the Minister for Sports, who joined us on that final day. And so it's a very high-profile event that really takes the brand to a new level. We had the Sirikwa Classics in Eldoret, and you can see the picture there. Minister Murkomen was our guest there. We have Kip Keino Classic coming up, which is another international sporting event that Absa sponsors. And so really driving the brand to new levels in terms of what we do. As a result, of course, quite a number of awards. I won't go through the list. They are all there. The one we are particularly proud of is the Bank of the Year Award 2025 by the Banker magazine, which is an internationally recognized award, as well as the financial reporting or FIRE award, as it's called. And you can see Mr. Yusuf there with the bow tie. He traveled long distances overnight to make sure that he receives that award personally. And really, we are very proud of the journey that our brand is on in that regard, and what the team continues to do to land our brand message. On the same page, we have the sustainability story. We do a sustainability report that we formally launch every year, so I won't go into the specifics, but again, good progress across key pillars on environment, education, health, and other areas that our sustainability work stream focuses on. Lastly, before I call Yusuf up, is really to talk about our colleague agenda and what we do internally with our staff to ensure that the brand does not just land out there in the world, but it also lives in the hearts of the people that we lead in Absa. And we monitor this very closely through surveys that we perform. 72% score in our colleague experience survey, up from last year 70%. Generally, we are top 3 or 2 in the entire Absa group on this score, and it's something that we are really proud of. We also benchmark against the industry, and you can see there at 82%, sitting well above the industry average. We track retention, i.e. how many of our key talent leaves the bank over a period of time, and that currently is below 3%, so we retain 97% of our talent, and it's something we are very proud of as an organization. So some important numbers there, and on the side we've shared some of the key achievements and developments over the course of this year. Of course, for the 5th year running, we have retained the Top Employer Award, and it's something that we are really proud of as an organization. So I'll pause there on the wider update on the macros and the strategy. I know everybody is waiting for Yusuf to come up here and now answer the question of so what has happened and how does it look like on the numbers. So allow me to welcome Yusuf here to give us those, and I will come back. Thank you. Thank you.
Good morning everyone. I think maybe just to conclude on the introduction of some of our senior executives. We have Christine, Christine, she looks at credit risk. And then I have my newly found friend, James Agin. He's our corporate director. James Agin, I was with him in Mombasa, and we visited quite a number of clients there, most of them Muslims, and James again was very comfortable. He said he's not going to take breakfast, so he supported me very well. When he came back to Nairobi and we visited clients here, he forgot about me completely, and I could see him carrying mandazis and everything else. So a very good friend, you can see why. Abdi has shared some details on the macros. I think, ladies and gentlemen, what defines our financials is the reference rates that we basically use for pricing, mainly the balance sheet. Abdi mentioned that CBR came down last year. If we look at it from the beginning of the year to the end, by about 250 basis points. And that basically means, of course, it has an impact on our margin, on our pricing, which we've been able to extend to our customers. Equally, if we try and go slightly 6 months further back to June 2024, the CBR has basically come down by about 425 basis points.
And that's really what has defined the financials that I'm going to share with you. I think the disconnect comes in when the CBR goes down, we pass that immediately to our customers. However, on the side of deposits, there's an impact because this is contractual. If you've put a term deposit of, say, 6 months, 1 year, then we have to ride that entire period. And that is a big element that you'll be able to see in our financials. I think just the last comment there before we start looking at the balance sheet is the GAVIs, the investments in government security. On average, we've seen a drop of about 130 basis point on that investment assets. And so if we move then to our financials, looking at the balance sheet in the first instance, you'll be able to see customer deposits, a growth of 1%. And if you look on the right-hand side, you see customer loans, also a growth of 1%. And the makeup of that is what I would really want to share with you. Customer deposits, while you see a growth of 1%, if you look at the category of deposits that we call transactional, the current accounts, you see a growth of about 6%. So an emphasis to the background that I've given you that it takes time for us to be able to reprice on the deposits as opposed to what happens on the side of the assets where, you know, within a month we're able to reprice. And you saw the recent announcement with the new risk-based pricing, Kesonia. The impact comes immediately. We reprice to the customers immediately. But last year, which is the financials we are looking at least we were giving the customers 1 month notice. And so our push was grow transactional deposits. You see on the savings and term deposits that coming down. And so the proportion of our deposits that is transactional, you see that now is at 66%, just to be able to contain the impact on the cost of funds. The cost of funds, you can see coming down from 5.1 to 3.4, so 170 basis point drop in cost of funds. However, customers, to the products that Abdi has mentioned, we give our customers an opportunity to go to high-yielding assets, and that you can be able to see under our assets management business. You see that the assets under management picking up significantly by 53% to about 46 billion. Higher yielding assets. Of course, customers, instead of them then sticking to deposit, they have the option to move to this different category of assets. On the customer loans, so a growth of 1%. While the rates came down sharply, and that's what Abdi shared earlier, the customers, especially consumer customers, the element of affordability, the element of having room to be able to borrow does not check in immediately. It takes time. Customers will repay their facilities. The impact they had, especially when taxes were raised back in 2024, was still riding towards the better part of 2025. And so we saw a drop in the demand for lending, even after the rates went down. However, if you look at corporate business, you see a demand and a growth in lending of about 5%. And we've seen this especially in the trade products. If you look at the areas in manufacturing from a sector perspective, they continued to borrow. Of course, with these favorable rates, that was also a motivation that they were able to pick. However, if you look at from a consumer perspective, it was more to do with short-term lending. Abdi again shared when we were looking at the new revenue streams, the likes of the digital lending, Timiza, we saw that picking up very well in this year. We saw mortgage also picking up, again following the drive coming from the affordable housing sector that we've seen the government really fast-tracking to be able to get affordable housing to the masses, and that also informed the growth in the assets that you're seeing there. I think looking forward as a board, together with management, and Abdi shared that, we are really looking at which are the sectors that we can then be able to focus on, the ones that are growing. Manufacturing is there. Agric, we are seeing that also coming through. Trade, services, and again, lastly, is the real estate, especially to do with affordable housing. On the right-hand side, we are showing total assets picking up 6%. The differential there will be the growth in our government securities, a growth of about 15% in this period that then will be able to make up for the differential that you're seeing on the customer lending. From a yields perspective, I mentioned 270 basis point drop in CBR. When you look at 250 basis drop in CBR, if you look at our loans, the drop in lending yields, that was about 270 basis point on average. If then I look at then the impact from a revenue perspective, you'll see, as expected, a drop in net interest income. You see a drop of 6% from 46.2 to 43.3 on this reporting period. Again, to the fact that a 270 basis point drop in lending, while the cost of fund a drop of 170, you see the margins coming down by about 100 basis point within this period. However, you look at the NFI, the non-funded revenue lines, that picks up 12%, and Abdi mentioned the key drivers, the new businesses, asset management, bank assurance, securities business, custody, all of this coming, showing double-digit growth rates, some of them literally doubling their revenue that was reported a year ago. And so an area that we're really proud, areas that we ventured, some of them like 5 years ago, others like custody, which are only just 1 year old, but then we can see the promise. All of a sudden contributing about 7% of the total revenue of the bank, and that's really what is driving the 12% growth in non-funded income. We've shown the diversification for our businesses on the right-hand side, really well-balanced, nearly like 50-50. If you look at it both in terms of revenue and also from a profitability perspective. And this basically gives you that comfort that if there's any specific sector, if there's any specific product that is being impacted, then we can be able to make up for the gap, in the other areas that we have been able to diversify to. If I move then to costs, you'll be able to see cost a drop of 5% year on year, a growth of 4% on staff cost, continuing to invest in our people, especially on the side of front office. But then tied to that, we are seeing opportunities because of automation. Abdi mentioned the digital, digitizing of our customer journeys to the tune of about 71%. 1 year ago, that was 65%. So that gives us an opportunity to be able to rebalance, move our staff from back office to front office. And so the investment continues, especially in these new revenue streams that we've mentioned. When I look at the other lines, other operating expenses, that coming down by about 21%. In their opportunities on the automation that I've mentioned, we've seen a use of robotics for some of our key processes, and then a move to alternate channels, which then has basically been able to give us an opportunity to do savings on these specific lines. Our cost-to-income ratio, you see that consistently coming down, 46% to 37%. Just shows you the investments that we are doing. Remember, it's a ratio of two sides. So there's efficiency that we are driving, but then also there's a revenue growth that we've been able to report over the period that is also informing that drop that you're able to see. If then I move to risk, looking at the impairment numbers, a good story. the stability, the drop in rates that we've seen last year, all of this through our models gives us opportunity to release some provisions that we've made. You've seen the element on the sovereign upgrade, one of the bridges we are putting to explain the drop. Recoveries that we've been able to do over the period, and then the improvement in the portfolio quality in the year, which then informs the 32% drop in impairment when you compare it from a year-on-year perspective. But the more important ratio there would be the loan loss ratio. You see that coming down from 2.9 to about 2%. Looking at some of the key ratios that we are always monitoring, gross NPL ratio, you see that at 11.4, an improvement from 12.3 1 year ago. The industry is at around 15.5. In there, of course, the opportunities, if you look at the gross non-performing book itself, that has come down from about 43 billion to 39 billion. So a good element of the risk management practices that we are applying in our lending book, and that can be evident when you look at these ratios. Coverage ratios at 65%, a big chunk coming because of the collateralized nature of our book, and also the fact that we are seeing the drop in the gross non-performing loan book, explaining that coverage ratio of about 65. Then move to the key slide where we bring all these financials together. So revenue, you see the 2% drop. A big chunk of that is because of the NII that I've explained, but then we've seen unfunded income picking up at 12%. Operating cost 5% down. Impairment 32% down, to then inform the profit growth year on year at 10%. On the balance sheet, we've gone through all of this, 1% both on assets and liabilities, but the key other number there that we've just shared is the investment in government securities. Key ratios is the next slide. That we've covered, I think, pretty much everything in here. I think just the others are regulatory ratios to do with core capital at 18%, 18.3%, liquidity ratio 45.6%, and then the return on equity at 23%. All of this trending in the right direction, all of this way above regulatory limits that are there, or like for the ROE, the benchmark that we have put, which is 5% above our cost of equity. So all of these are putting a tick in terms of meeting those minimum thresholds that we have set for ourselves or have been set by the regulator. So a very healthy, ratios relative to what we have put for our own internal benchmarking or coming from the regulator. So my last slide before then I request Abdi to come back here is a guidance. We look at the growth in the balance sheet. We saw that was muted, single low digits in the period. We've explained that, noting what was happening in the year. On the deposits, we could have shown double-digit growth rates in deposits, but then we took the right measures, focused mainly on growing on transactional deposits. However, for this period, guidance going forward, we are seeing a return. We've seen our balance sheet starting to peak even in this quarter. Stability on the macros, touch wood in terms of what is happening from a geopolitical risk. We hope that can be resolved within a short period. If it continues, the impact for that will be quite huge. But then from an ambition, agreed with the board, is to be able to have double-digit growth rates on the balance sheet, going back to what we had in the previous years. Cost-to-income ratio at low 40s, that's what we are looking at. So a big appetite for investments, and Abdi covered that. Our book of work every year, investments in technology especially, you'll always see between 2 to 3 billion shillings budget that has already been approved, supported by the board. And so in there, you can see we have appetite to be able to invest. Return on equity, still this continues as a minimum 5% of, above our cost of equity. Our cost of equity is around 17%. So we put that as a threshold that we have an internal benchmark that we must be able to meet. And then the last one there, in terms of the quality of a balance sheet, consistently all these years, you've always seen that this is always better than what we see in the industry, and really speaks to the risk framework that we're able to run with, and that still continues to be our target as we move into the medium term. So, ladies and gentlemen, let me pause here and then request Abdi to come back here. Thank you so much.
Well landed, Yusuf. Thank you very much, and done within the time required by the markets as well. We have just two final slides, and then we'll have the Q&A session. The first one is really just a summary. I think where revenues landed, you can see that, and Yusuf has explained very clearly within there which are the growth areas where we saw double digit. The NFI number was particularly pleasing this year, 12% up. That's a 2 billion number year on year, and therefore the revenue number should be viewed in that context. We've shown the profit growth, what's happening to client assets, and we see 2025 as a bit of a reset year because of the big changes that happened in the pricing framework, and as the effects of that come through in the industry, we're starting to see our lending book also responding. There is a bit of a summary there on the side around our strategy, and one of the things we've done is also anchor it very closely to the strategy at a group level. No major changes for us in Kenya. The pillars remain as they are. We talk about customer-led growth and putting the customer at the center of everything that we do in terms of our growth and transformation. Yusuf spoke about excellence and what we do in the area of cost and efficiency. This is an area in which we are market leading, and we are also one of the best performers within our group as well. We're talking about diversification of the business, and that's where we were talking about all these new streams that we are trying to put in. There is also a diversification around sectors so that we ensure the bank is balanced in terms of the sector participation that we do, and we are not overexposed or underexposed to any particular sector. And of course, we continue to look at new growth opportunities, both organic as well as inorganic, and it's an important part of the strategy as we move forward. Lastly is the drum roll kind of slide that we always do at the end, which speaks to the shareholder return. And we look at the shareholder return from two perspectives. One is really looking at the dividend payout and where that is landing. And as you can see there, or you will see shortly, we've continued to grow the dividend payout. The year-on-year number has gone up 17%, from a 1.75 per share last year to 2.05. And if you look at the 4-year kind of picture, you will see that that number has almost doubled over a 4-year period. And we believe that is quite a decent performance from a dividend payout perspective. The other angle that we look at in terms of shareholder return is really what's happening to the asset value itself, the share value in the stock exchange. And, we've shown what's happening there from the years 2023 to date. And this year, we've experienced an appreciation of the Absa share price of 37%. Again, when you look at the 2025 number compared to 2023, it's more than, the picture is more than a doubling picture. So again, an area that we are very proud of. It's part of a wider rally in the market, but indeed we have been one of the better performers. And down there you will see the total market capitalization moving from 62 billion to 133 billion in 2025. So more than doubling there, which has put us as an organization top 3 in market capitalization in the listed banks, and top 5 of all listed companies in the bank, non-bank, all listed companies. So it's very good progression from a shareholder perspective, with both the dividend and the valuation showing very good performance. And we believe that shareholders will be pleased with this outcome. So let me pause there, ladies and gentlemen, and we'll now prepare for the Q&A session. Charles, do I call you back here? All right, thank you. Thank you, everyone.
Okay, thank you. Another big round of applause for Abdi, Yusuf, Chairman. I do really hope that as a result of these presentations and the comments that have been made here by both our Chairman, CEO, as well as Yusuf, our CFO, that you now have a better understanding, appreciation of the journey we are walking. We like to say at Absa that we don't look at a year in isolation. We are walking a journey. We are on a strategic horizon that's running up to 2028. And we do hope that these highlights of 2025 give you confidence that we are an organization on the move, and that one that will continue to grow. I did say that we were online, and I've got some comments, all flowery and very encouraging comments from people like Peter Kimanzi, who says, "That's my bank." Caroline Miner, "Well done, Absa Bank, keep moving on." Good news. Cadogan says, "Always on point." Vincent, on point, and many more. And I just want to pause there and say a big thank you to all of you who've made time to follow this session online. We will close the online session here so that we can just be left to have further engagements with those of us in the room. But we really appreciate your interest in our business, and we will continue to share updates on the go, as we always do, as regards to how we are progressing in implementing our strategies. I shall now open this session to just engage in a question and answer engagement. I think just 2 quick things to mention. One, if the technical team can help me to bring 2 seats on the stage for Abdi and Yusuf to take the questions. We'll do the question and answer format in 2 formats, as we do in 2 sessions. The members of the investment community, analysts, we did hear your feedback around just the gap of time that we leave between media and coming to you, and so we are deliberate. Today we will leave it only to 5 or so minutes. So if you don't mind, allow us to take questions from the media. We excuse them from the room, and within 5 or so minutes we'll be ready to take the questions from the analyst community. All right, Abdi, Yusuf, can I welcome you back on stage? Excuse me.